We're certainly not seeing big increases in earnings or earnings estimates into the future. So we're seeing PE expansion rather than earnings growth driving the market up, and that is because interest rates are lower. I think that's a very difficult tide to swim against at the moment. We're seeing a lot of foreign money come into the country, so some of my friends that work in the trading space and deal with offshore hedge funds are seeing the first big flows into Australia that they've seen in the past 5 years. And that is people coming in on the back of this interest rates are going lower theme and buying yield stocks. And if you look at the gap at the moment between the 10-year government bond rate and the earnings yield that you're getting on the stock market, it's as wide as it's been in a long time. So I still think it's difficult to fight against that trend, and I think if we see more rate cuts, then the big safe dividend paying stocks are still going to be attractive. For me, there's a few exceptions to that. I think the banks are very closely tied up with the economy, and if you own the banks, you should be worried about the same things that the RBA is worried about when they're cutting rates. So I'd put Telstra in the category of something that I'm pretty confident is going to keep paying the same dividends. I wouldn't necessarily put the banks in that same category. Well, I think bidding up particularly the unsustainable yield company. So obviously everyone's caught on to the fact that if you pay a dividend, then stock prices are going up. And I saw an article the other day saying they're basically the listed companies in Australia are paying out as much as they can possibly pay out. And I think there's a lot of companies within that subset where I would say, don't just buy this based on yield. Have a real long, hard think about how sustainable the profits are to start with, and then how sustainable the payout ratio is. You know, if they're not reinvesting in the business and they're not trying to grow the business, then what does that mean for profits 5-10 years down the track? I saw the Coca-Cola Amatil CEO on TV earlier this week, and she was talking about their Indonesia business that they started investing in early 1990s it was, and they've put a lot of money into that business and it's still not earning an adequate return on capital, but they think by 2020 it will be earning an adequate return on capital and it's going to be a very attractive place to be. I don't think we're seeing a lot of that long-term investment from Australian businesses at the moment because everyone's trying to pay out as much as they can.